Okay, so thank you so much for having me. I'm Tamara. I'm honored to have outstanding experts join me at this panel to discuss technology behind CBDCs. So Anthony, Wolf, and Nico, and Joachim. So they will present themselves in a minute, but before we start, I'd like to set up the panel structure. So we will have first to discuss among ourselves, and then some minutes will be dedicated to Q&A. So please prepare your questions. Okay, let's start to my far right. Anthony, please.
Hi everyone, Anthony Ralphs from Ripple. I'm the head of our product offering for our digital currency platform. I'm probably introduced myself as a self-confessed payments nerd. I like payments. I work in them for the last 20 years. I have a broad background in technology before that, but I've spent the 20 years working with everything from mom and pop shops to global banks, looking at how they integrate, how they provide services to their customers, and integrating into domestic payment systems and cross-border payment systems. Most recently, when I joined Ripple 6 years ago, I was responsible for helping build out the RippleNet global cross-border payments network. As part of that responsibility was looking at the standardization and the rule book around the standardization of processing cross-border payments. So some of the things that were touched on the previous panel was something I was involved in day to day in terms of looking at how do we make that frictionless and easy and accessible.
Wolfgang, please.
Hello, my name is Wolfgang Berger. I'm in IBM Consulting. I have a background in development, spending most of my time today is in application modernization. Payments is one of the domains, so naturally getting into CBDCs at some point, so retail CBDC. As it was already pointed out in the previous panels, it's not easy to do technically. The technology is there basically, but anyways, it's very challenging to build up such a system. There are many elements we need to look into. But honestly, I think the biggest complexity is beyond technology. So to really understand how this gets into the market. We had a lot of discussions in the previous panels around privacy. That's one of the key elements, and you really need to go down to the attributes to really understand how you're building the system. So as Stefano said, you need to understand it from ground up to really do a proper design, and then also think about transparency aspects to really get the trust into the citizens and into the population. And then education is a big topic because people need to understand it. And we had yesterday evening a long discussion around education and the various aspects there. And if I just look into my relatives and friends, there are many in the bubble where we are in with the CBDCs. But there are also a lot of people outside the bubble, and they will have a lot of difficulties to really understand how is it done, how is it implemented, how can I control it, and what is actually the added value. And what was also in the previous panel, I think it was Alex mentioning it, that we should not overdo it in terms of functionality. We should be very focused, which is of course a very good sign for me as a technologist to understand that we are not talking about so many bells and whistles we usually do when we are building systems, but that we really have an opportunity here to focus on the key elements which we need to introduce into the system, and see that this is then progressing and getting adopted very, very easily.
Thank you. Nico, please.
Thank you. Hello, everyone. I'm Anikó Szombathy, Chief Digital Officer and Executive Director for Digitalization and FinTech Support at MNB, the Central Bank of Hungary. So my job is about supporting and incentivizing financial innovation per se, and in particular to incentivize the digital transformation of the incumbent financial sector in Hungary, to support the safe spreading of fintechs, and also to harness the cutting-edge technologies at the central bank itself. And within this endeavor, of course, CBDC research is one of our main projects. And here I would like to just summarize a little bit what my central bank colleagues already tried to emphasize, that how unique CBDC project can be. So on the one hand, the central banks have to behave and act like real fintech, so seek the customer need and research actually what the exact market failure is that they want to improve, because anyway then they are not ambitioning crowding out the whole commercial banking sector per se, but only providing solution to where the problem is. So this is already quite challenging, but also being a public institution, we have additional hurdles. Just to mention some, we have to make our choices based on public procurement processes, which is quite cumbersome and which is actually maybe ideal for buying chairs and tables, but not so ideal for buying technology and processes. And also related to this, some jurisdictions, or at least the public authorities, have limitations on cloud usage. And so when we are implementing, or in our case, piloting CBDC projects, we have to make a lot of choices, and we are facing so many unforeseen issues that makes our life quite busy.
Yeah, payments is sort of something that everybody's using, but very few, as you said, Volkan, really knows how it works. There are a lot of people outside the bubble. I was outside the bubble just 4 years ago. I don't have sort of your 20 years of experience, but I actually think that that's probably one of my biggest strengths in this room, that I was outside. I had a beginner's mind. I'm a tech pioneer, and having that beginner's mind allows you to look at the problem and not being biased by technology of how payments works today. And I think that's, particularly for CBDCs, probably quite important, because CBDCs is sort of a bit different in my opinion. We have cash today, we have physical cash. We want to do something which is sort of similar to that. And right now what we have, we just online systems. They're not similar at all to cash. So I think there is a challenge. And I'm a serial entrepreneur. Currently I am the CEO of Crunchfish. It's a Swedish listed company. And we've been pounding on this idea of digital cash since 2020. We're in India right now, working with some projects with the biggest bank of India, sort of HDFC, together with another bank, IDFC, under the supervision of the Central Bank of India, RBI. So we are live with what we do. And I think the strength in what we do is what I had here in the first panel. We've actually created a tamper-resistant environment in an app. So we can have a stored value on an app. And I think that is one of the key enablers for any sort of enablement to have that. And I'd love to come back to that when we go into more details in this panel.
We will, for sure. Thank you so much for being here. So you know that CBDCs rely on technology, and even in an intermediated CBDC model, the central bank must to build a core system for issuing CBDCs and processing transactions. And one of the great difficulties in making decisions while much of this technology is still developing. So central banks must decide where to acquire the technology if they do not build this in-house, and which technology best suits their goals. So perhaps you can start with you, Nico. So in July 2021, the National Bank of Hungary published a study volume on CBDCs, which covers not only monetary policy and, of course, financial stability, but also some of the issues of infrastructure, implementation, and technology. So how this process of choosing the supplier and the technology have happened in the pilots that the National Bank of Hungary is conducting?
So thank you for referring to this publication. Actually, this also contains our design framework, so where we started to think about CBDCs, we tried to put together a comprehensive decision-making structure that could lead us to a successful project. And so the real foundation of a CBDC which serves the society's goal is to define that concrete market failure or policy objective that drives the whole process. So we cannot underline how important it is and how much effect has on the whole bunch of further decisions. So in this way, what I can stress is that this fundamental goal or motivation factor can be like supporting digital financial inclusion, what we have heard already, but also there can be a valid goal to create a central infrastructure that can be a platform for any further government subsidies or government policies that the fiscal authority would like to fulfill in a very quick, timely way with distant implementation. But also, as Agustin Carstens also recently laid out, it can be a single ledger for any further innovation in the financial ecosystem. So it can be a bridge to the future of finance, if we say. And also it can have such a little bit more indirect motivations like having monetary sovereignty or having an integrated financial system. But in this way, when we have these objectives, which are not so much related to the customer needs, but to the central bank's objective, then I would say we are in a little bit more difficult situation, because to having the final goal of some level of adoption, because I also I would doubt the statement that the success criteria would be really adoption, because if you want just a backup system or if you are creating a public infrastructure, why would we need that everyone would use it anytime? So, but it's only in the bracelet. So my major statement here is that if you decide on the goal, then it drives further decisions like the role of commercial banks, privacy, anonymity, the exact form of offline, online. And then when making all these decisions, can only come the technology choice, because luckily we are in an age where technology is developing really rapidly, and I'm sure that all these selections could be served by different providers. But first, we really have to have this detailed structure of decisions that can be served by the vendors.
Okay. So turning to the side of the supplier, we know that the Ripple has a complete platform for mining, managing, transacting, and even destroying CBDCs. And this solution is based on the XRP Ledger technology, which is a decentralized and public blockchain. So Anthony, how does Ripple make this solution available to central banks?
Thank you. So I guess we start from a really strong foundation. The XRP Ledger is kind of there's association with Ripple. One of the original founders, creators, still works at Ripple and is actively contributing to the wider community. And with that, we get a ledger that's been in use for 10 years. It's processed billions of dollars of value across it. So we're not writing something from scratch here. So what we're doing, and because it's open source, there's contribution, there's active delivery and change to that ledger through the community. So we kind of take that, and what we want to do is provide expertise to central banks and decision makers who are looking to experiment, understand, and use this technology to remove really some of that sort of thinking around how do I solve some of the double spend problems, actually think about the application of the implementation of it, because ultimately, and I've heard this on just now from Aniko, but from other panels this morning, central banks in this context are becoming product owners. They need to think about how do they roll this out. And there are, I can think of the last 10 years where there's been initiatives around new innovations around the banking sector that either are really successful or complete failures, with adoption becoming minimal, that actually it gets withdrawn from service. So what we want to do is try and help enable central banks and issuers to actually focus on the bits that they understand, that they work with, and we just provide that expertise. And with that foundation, that open source platform, what we're doing is making, from a Ripple perspective, taking a copy of that open source ledger and making it available in a private context. So you don't have to use the public ledger. We've got central banks that are deploying this purely in a private context, so creating a private network and then making sure that that fits their purpose, their use cases. And with that, you get all the benefits of the public capability just in a private context, where you can control the participation, you can control all the parameters of how it works, you can control the governance model. And so it kind of takes the technology and makes it available at a domestic level. And I think the other important point is the reason why, personally, I like the XRP ledger, not just because I work at Ripple. It has a lot of fundamentals out of the box. We're not having to write smart contracts to issue a token. There's native functionality baked into the ledger. And there were far greater minds that created this technology than mine when they sort of originally create this foundation. They built a lot of it with sort of fundamentals in mind, that this is a plumbing technology, this is a foundational component. So the less you can actually spend time writing code that actually injects risk and having a strong foundation, we think this is a strong benefit to central banks to focus on how do they get the most out of this technology, how do they apply their use cases to it, and that's kind of Ripple's role in helping that education and also helping that sort of development process.
Thank you. Yeah, we know that this is another big choice, the nature of the ledger. We just talked about a solution that it's based on the public blockchain and made it available to central banks to use it in the private context. But there are centralized solutions or even some kind of hybrid ledger, and we have seen different approaches in each jurisdiction. And IBM is involved in many related projects. So Wolfgang, in your opinion, what are the benefits and the drawbacks of DLT-based CBDCs when you compare it with the traditional solution, for example?
That's the key question. I think you need to start at a different point. You really need to look into the requirements and what you want to achieve, because otherwise you go like technology first and then you decide on the requirements and then you basically will miss the point. And what we see from the design discussions is that you need to be crystal clear what you want to achieve. And we have the key requirements around security, we have it around resilience, and of course around privacy. And privacy as such is a gray scale, so you need to look into what is the level you want to achieve. And there, as I said before, you really need to look into the details and you need to decide what is on what layer in the CBDC deployment finally. So what is with the intermediaries, what is with the different elements in the intermediaries, and what is finally sitting in the central bank. And how do you then implement what you need to do from a regulatory perspective? So it's the AML, KYC type of requirements. And then when you're clear on what you want to achieve and what you don't want to store and what you want to anonymize and what is the reasoning you would like to take based on the data to really have a successful rollout, then you can decide on the technology. And if you go UTXO, then you have certain advantages, of course. You have the sequence, you can do a lot of scalability, etc. So we know all the benefits there. On account-based, you have different benefits, but this needs to be balanced. And first, you need to be very clear, and then you can go into the implementation. And of course, you can adjust it. So we have our labs in Zurich, for example. They are heavily working on Hyperledger Fabric. And there are a lot of possibilities to introduce certain elements and functionalities into the technology. But of course, you need to be clear what you want to achieve. And then it's really the best to start with a value proposition and then to see what do I want to achieve towards end users, retail users, what do I want to achieve towards the banks. And then you can decide and see how the entire picture looks like. Not just looking into technology and then deciding DLT, and is it UTXO versus accounts, or where do you want to position it?
Thank you. Happy to touch at this about the accountant-based CBDC. So we know that how this technology will be accessed, I mean, how the transactions will be initiated, it's also an important choice. We will have accountants accessible via identifications or tokens accessible via knowledge. So Joachim, in your opinion, how does this account versus token dilemma can be solved?
I don't know if it's a big dilemma. I think from a central point of view, it could be a token-based system. It can be an account-based system. A key concept, I think, to understand is what in the crypto world is known as layer 1 and layer 2 solutions. Layer 1 being a native solution. Native mean that you have the same security protocol as you have in the underlying rail. But you can also have non-native. In the crypto world, sort of the Lightning Network is sort of an layer 2 solution. It's a non-native. They have another security protocol than the underlying Bitcoin sort of structure. And cash essentially is something that I think works offline. So I think if you're going to do it working offline and you want to replicate one property that I really think is quite good with cash is that you can transform from one scheme. You have digital money. You can have that on your bank account, and you go to an ATM machine, you take out money. You have it in cash. It's another security protocol in your physical cash. I can pay it to anyone. No one tracks that. You have your privacy that way. No one tracks that in the general ledger. That same property, I think we have to replicate in the world of digital money here, of digital CBDCs. The thing I personally think will be difficult to do is to replicate the banknote itself, to actually have the banknote and make that digital. I think that's a challenge. That's going to be difficult to do. That's not the way I think it should be digitized at all. So I believe very much in a security protocol which is non-native, where you can have whatever rail you want, tokenized, it can be account-based, and you can have it in distributed ledger, or you can have it in a centralized ledger. But the key thing is that you take it out in another security protocol, just like cash is today, and then you can transform in that sort of security protocol, and you can put it back again. That's a non-native sort of scheme, and that's, I think, is the key thing to do here. You still have to take care of things like anti-money laundering, tax evasion and the black market and things like that, but you can put limits. You can put limits on your wallet of how much you can transact, and in that way we can get to something which is quite a similar scheme as how we can treat with cash today. You're not allowed to walk into a bank with $100,000 in a sort of a suitcase. They have to ask questions. Similarly, we can put limits of what you're allowed to do digitally, but fundamentally I think it's let's have it as a non-native scheme. And if you think of it having it non-native, then you can start questioning, why would you even start with token in the first place? Why not ride on the existing, very well proven account-based rails that we already have today, and you make it from there non-native to transform things or transact things offline. But certainly if you all want to do your minting of digital tokens and have it that way, that works as well. So the question here is, anything goes in the back-end rail, but you need to do something smart to do it offline, because otherwise you're not anywhere near having a cash-like system.
Thank you. So turning back to you, Anthony, you just mentioned that you helped to build and start the Ripple cross-border payment network. So you spent a lot of time building the rules and the technical standards for interoperability. So what do you think are the most important choices here when we pursue not only cross-border payments, but also integration with the retail payment system and the banking system?
I think this is really, really important. I think if we just treat it as an independent system, it'll end up in a silo. To sort of Joachim's point, I think there needs to be sort of consideration for how does this talk to the outside world. Cash is a very good example. I can walk up and give you pounds, you can give me euros. It's a really easy way of interfacing. There are existing systems that work today, but I think everybody in this room knows that there are frictions in those systems. The G20 is looking at this, and this is something that we were trying to solve for with RippleNet. So I think in its first principle, there needs to be some common protocols and standards that allow disparate systems to talk to each other in a consistent way. From a pure technology perspective, that's probably the easy bit, if I'm perfectly honest. It's the legal framework, it's the regulatory framework, it's the compliance frameworks that sit on top of that are actually difficult. Because every jurisdiction has their own interpretation of regulations, what anti-money laundering looks like, who's on a bad guys list kind of thing. So there needs to be some way of handling all of that. And also, as part of that, what does settlement finality look like between two disparate systems? That might work well in one system where you've got a clear rule book. So a domestic payment scheme is a really good example of where settlement finality is defined. But when you're going between two disparate systems, what does that actually look like? They might be delivered by two different providers of two different technology states. What does that look like? So some of this requires community thinking of how do we think about standards and protocols. I kind of look back a little bit in history of how some of this has worked. If I send an email account from my Outlook account to your Gmail account, there's a standard protocol for that. It doesn't really care who the provider is of those systems. That's a really, really simplistic example. Finance is a lot more complex than that. But there needs to be those common rules of the road for achieving that. Otherwise, you're going to end up in lots of different systems. And if we look at CBDCs, there's a lot of experimentation around the world with a lot of different providers. If you end up with just connecting the providers together who built their own systems, and then you end up with islands. That's not the goal of what we're trying to do here, and I think that speaks to a lot of the projects that the central banks are looking at. How do we improve cross-border efficiencies? So I think that there needs to be some fundamentals there, but even at a domestic level, there needs to be sort of commonality of how do you integrate. So if I think about, at the moment, if I want to fund my CBDC wallet from my bank account, my banking system can't take account to a public address for a crypto wallet. So either that system needs to adapt, or the CBDC underlying platform needs to adapt, or there needs to be some common bridge protocol that looks like it. And systems have already started to look at this around the world of bringing in cell numbers or email addresses or some other identifier as a proxy. So there's an identity component that needs to sit over the top of this as well. And then again, that starts to touch on privacy and how much do you share. So it's fairly nuanced. The technical piece is the easy bit of actually creating a protocol that actually allows different interaction. But when you start talking about movement of value and movement of information that supports that has a regulatory framework, that's a different conversation, but it's something that has to be tackled, and that's kind of where we're looking at working with central banks on to provide the technical expertise so that they can think about how does it apply to policy. It's a multi-layered cake. I think the analogy was somebody was talking about earlier on. There's multiple layers to this. The technology piece is probably the easiest bit, if I'm perfectly honest.
Okay. We know that IBM blockchain WorldWire, it's also a solution built on Stellar, which is also a public chain. So Wolfgang, do you think this technology can contribute to cross-border payments and then interoperability in some way when you talk about CBDCs?
Yeah, I think basically you can use DLTs for the cross-border topics, yeah. But as Anthony said already, the biggest challenge is on the jurisdiction side, on the regulatory side and compliance side. Technically, we have the technology, it's there. Of course, it needs to be improved, it needs to be augmented to fulfill the privacy topics and a couple of more elements, but the key considerations are in a different domain, in a different area at least. When it comes to the integration into the banks, then I think, or into the intermediaries, I think it's very critical to look into existing mechanisms. If we have frictions there, of course, we can use the opportunity to fix them. But otherwise, we cannot revamp the entire system. That will be quite difficult to get acceptance in a very timely manner, because otherwise you need to coordinate a lot of changes. And if you can use things which are there, standards which are existing, then the compliance and regulatory work, what is going on, which is going on, then we should do this, and we should not start reinventing the wheel and trying to build new rails because we think we are smarter than the industry was in the past 20 years. So we have a certain level of maturity, and we should really build on this, because it's a long way from the retail CBDC up to the users and get it really into the wallets and then get it actually used. Yeah? And we need to be pretty fast, because there are a lot of other developments happening in the market. And if you take many, many years, then there will be a lot of development, because you see what the pace is in payments innovation, and a lot is coming up. And so we need to be very quick to really get into the market and get the acceptance.
Yeah, I'd like to bring to the discussion the offline payment topic. So we also have seen different solutions depending on the use cases. And Aniko, you mentioned that the offline solution of the National Bank of Hungary haven't started yet. But do you think this feature is important for your use cases, and what are the biggest difficulties related with this topic?
Indeed, it is. It is, I think, apart from privacy, one of the favorite objects of central banks today. But before answering this, just briefly outline where we are in the CBDC journey. So in Hungary, we haven't yet identified that major market failure that would drive us to immediately start introducing a fully fledged retail CBDC. People in Hungary actually like cash, similar to other Central European countries, but apart from that, we have obligatory instant payment system with all PSPs are members, and it is working 7/24. The average execution time is 2 seconds, so we are quite satisfied with it. So, but nevertheless, we are doing several experiments where we involve real customers and where we want to learn and build capacity, and therefore shorten time to market for the big project when it is launched. So right now we are active both in the retail and wholesale realm. And the retail field, we are running 2 pilots parallelly. We are designing this with the view that what can still be those motivating factors for us in the future. One is to strengthen digital financial inclusion, and the other is to create a platform for future innovation. And so to start with this, we do believe that probably DLT technology will be necessary for laying the ground for smart contracts and programmable payments. So therefore, we have just heard from Mr. Strada that he haven't seen so many blockchain systems operated by central banks. So we have one which has been operating for a year now. It's a Hyperledger-based system, and this is actually a platform for issuing NFTs by the Central Bank of Hungary. So we happen to be the first central bank who is active in this field, and these NFTs who are designed to replicate some commemorative coins can be won by customers who are filling in quizzes. So we are not selling them, but since these are distributed, these can be exchanged, collected, and this platform serves as a lot of for a lot of experiences. And our other project is actually a centrally managed infrastructure. It's called Digital Student Safe, and we are actually providing a digital wallet for primary school year students as possible users of future CBDC, and we are running actually a current account for them, and we also put some gamification to increase the interest towards our system. And in this way, since we are targeting this user group who are not actually having unlimited internet connection, in this project we are considering to providing offline functionalities. And since we have the clear use case, we can have the criteria for selecting probably in the upcoming months that technology and that provider that can be best attached to our modular system, and that can also serve us further experience for the future selection.
Thank you. Yeah. So Crunchfish has a solution called Digital Cash, which has the ability to complement, as you mentioned before, or other means of payment. So for instance, it could work together with the e-krona, for example, to make the system more robust. So how does this offline technology work?
I'd like to take you back 30 years. I used to work for Ericsson. You know, I'm from Sweden. I do my years at Ericsson. And I was at a conference where we were peddling our voice circuit switch networks. That was everywhere in the world. And the Americans came along and said, it's going to be something new called the internet. We thought it was a fad. It would probably go away. It didn't. It changed the world. Everything is now packet switch, packet based. That's what we have now today. However, the payment applications that is built on top, it's still like a circuit. It only works when everything works. You need to have your uplink connection. The remitting bank needs to be up, the switches has to be up, the identification service has to be up, and everything has to be up. If you cut it anywhere, it fails. That is what the Americans solved for communications with the internet. And that is what I think an offline protocol at that level can solve for payments. Payments is still in the 80s. It's still using sort of like a circuit switch sort of idea. What we are essentially doing is that we're providing trust into the application client. We have a software-based, tamper-resistant element where we can have a trusted application. From there, you can append the application data that you send and use, say, a TCP/IP system or any other protocol. One great use case is that if you as a user do not have data, and even in Ericsson land Sweden, if I am at a big event, I don't have data all the time. You know, if I'm at a big soccer event, I can't pay with Swish, our sort of real-time payment service, because I don't get a channel. What you can do then with our agnostic protocol is to send it over telecom, because typically that's available. So we can reroute. We are completely agnostic to communication network, to any sort of protocol, to any application, so we can build on top of anything. I like what you're saying, Wolfgang. I think that's very important. Don't go around and change the world what is working, but it needs to complement now with something that is cash-like. We need offline, for sure, because otherwise, you know, it's going to be another online system. That CBDC just doing an online payment system, I don't think it's really worth having. Because I think we have that already. The fact that we will get more security of that is guaranteed by a central bank rather than a commercial bank, that's little extra value. But we need the features of cash. That means inclusion, we mean privacy, we mean universability, we mean offline. That we need to do. And we should do it in combination of what we already have today, creating that non-native scheme that I think will do it. And the fundamentals for that is to bring trust into the payments app. So we have a stored value on an app, and we can interact with stored value on cards that we need as well, certainly for digital and financial inclusion. If we build it up that way, we can have CBDC quite soon, in my opinion. That will work and will scale. And that I think the central bank, in my opinion, who else than the central bank will modernize payments? Because any commercial company, they have an obligation to shareholders to make money. So they will always skim the market to take the most lucrative parts. But I think the central bank have the public's view. They should be the one that go forward with all these features. And I believe what's going to happen is that then the other services that we already have, they will follow, because they will not be as popular if you, as the central banks, coming out with something that always works. I think that will change the world.
Thank you. We have time, questions from the audience. Chris? Yeah.
Oh. Thank you so much, Sophie.
Thank you, Sophie. Yes, it's a long wait for the microphone. This is a question for these panelists, but it also applies to the previous panelists as well. I'm Chris Ostrowski from SODA. We hear a lot about replicating the good things that we see, you know, offline, privacy, these sorts of things. If I could ask the panelists to think of a use case or an example of what they see in crypto that they think should be available with public money, would you be able to think of something that you think CBDCs should be able to match in terms of the usability and the use cases that currently only exist in the crypto sphere?
Who wants to take?
I'll take a first pass at that. So I think what you're seeing is some of the innovation, like decentralized exchanges as an example, or the ability to participate in a more inclusive financial ecosystem, which, when you look at certain economies, they do this today, but they do it offline through cash. So I think this potentially makes it easier for people to lend. So I'm thinking of, there's been a couple of examples of remote locations today where it's very disparate, very physically hard to move around the geography of a country. With this technology, like a DeFi protocol that would allow you to potentially lend to somebody you know and have already trusted, would actually be super advantageous. So I think that that's just a first principle. I kind of look back where we are, we're just scratching the surface with this stuff. It's like the internet was in the 90s. Everybody got excited about sending an email because it saved them sending a letter and writing it. And think about where we are now and what it enables. So I think just some of these core protocols open up so many other possibilities. Targeted distribution of assets as well has a huge benefit to make it far more easy and far more tactically focused than how we distribute funds today, as an example, if we're giving welfare out. Could be one example.
Thank you. So since we are almost out of time, I'd like to thank the panelists and also the audience for their attention. Thank you so much.